Alright, get the tweet out. Get some people in. Oh, I need to get this link copied too. What's up, Kevin? How's the weather down there in Florida? It's probably pretty similar to mine out here. At least that's my guess. I could be way off. What's up, T-Burn? Sunil, Roman, how are you guys? It's getting cold in Florida. Oh, not here. It is beautiful here. Make sure you guys go and retweet the tweet I just put out. Let's get some more people in here. Always happy to have new faces. Try to get more and more people involved in this. What's up, Raph? Did they report last week? I think they did, right? SPG, or is that upcoming? I have not looked at them, and I'm not going to pretend I did either. That's one thing you guys will never get from me, guys. I will never pretend like I know the answer to something that I don't. That ain't what we're here for, right? 9 and sunny in New England. 9. That's a single digit weather report right there. That's crazy. We'll get this kicked off here in just a few more minutes, guys. If you guys are just joining, make sure please retweet or send out your own tweet. Let's promote the Sunday prep. Should be a good one. Got a lot of ideas, so I'm probably gonna more or less go a little bit faster over the ideas. I feel like sometimes the ideas we can drag on forever about them, and really the ideas are probably the least important part about these Sunday preps. Yeah, Katie, that's where I'm out. Is out in Cali, and it's beautiful here. I got a loud keyboard if you guys can't hear it. I'm sure you can. Dun 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 dun. Get some water and we'll get going, guys. Hydration. You guys like my True Trader Hydro Flask? This thing is dope. This is from when the guys at True Trader all did a Spartan race together last October in Georgia. Epic. If you guys aren't part of True Trader, I don't know any other communities out there doing Spartan races together. All right, it's 2 o'clock my time. 2 o'clock my time, 5 p.m. Eastern time. So we're gonna get this started, guys. As always, make sure you are subscribed to the YouTube channel and turn on the notifications so you don't miss things like the midweek watch done by my brother from another mother, Goose, who drops golden eggs metaphorically and literally all the time. Thursday mornings, 8:30 market time for about a half hour. He basically gives you guys executable ideas for Thursday morning and Friday, things he'll be watching for the end of the week, and he's usually very, very spot on. And he's got a lot of wisdom. The dude was a former market maker. He's got, I want to say like 25 years in the business, which it's hard to believe because he's only like 30 years old. But if you guys don't have the notifications turned on, it's going to be hit or miss whether you catch it. Remember that. So, I always try to tweet those things out. If you guys see me tweet out the midweek watch Thursday morning, don't be scared. Retweet my tweet, guys. All right, and so if you like these videos, also, of course, give them a thumbs up. Leave comments, not just in the live chat right now, but if you're watching this and it's not being done live, still leave some feedback, because I would like to know what you guys want to see more of or what you guys want me to cut out, right? So we're always listening. Next, obviously, Cobra. Got the shirt on today and the hat. This is by far my favorite broker, guys. If you guys are looking for the best broker in the business, by far, it's these guys. And there's a link in the description. It'll get you 25% off your commissions and a month free of whatever platform you choose to use for your executions. I'm going to skip the next one I always do. I'm going to jump right into Scripts to Trade, guys. Scripts to Trade. Oh my God, these guys make the most awesome indicators for TradingView and Thinkorswim, and I think they're developing them for other platforms as well. And they got a new one that's coming out real soon that's based on their version of pivots, which I love. I can't wait to see the rest of the world get to try these indicators out. So head on over to Scripts to Trade if you don't know about them and check them out, guys. Earnings for the week, there's a lot of them. As you can see, we got a ton of people reporting. We're still in the early front part of the earnings season, which is always the most exciting. And of course, if you guys don't know, I did a webinar on how to prepare for earnings. I'm sure High Trader can probably share it in the chat. Maybe we'll put it in the link of the description as well. And that's available for everybody to go watch. And Spike Heat. So actually, I'll go ahead and talk about Spike Heat real quick. Guys, these guys make a platform that allows you to pull historical data so that if you have an idea about something that might be an edge and you want to test it, this is the best way to not have to just do it manually, tracking the data, and be able to go and pull historical data so you don't have to just start from today and hope you can gather a large sample size over the next few months. Instead, you can get a large sample size right now, today. Head over to Spike Heat and check them out, and we'll talk more about them later. Real quick though, I want to just give a shout out to Traders for a Cause. If you guys don't know, go to impact.tradersforacause.org. These guys raise money for cancer research and, of course, cancer, right? And go over there, make a donation, and you get access to tons and tons of content. All the speakers from all the Traders for a Cause events, all the podcast stuff they've done. And in fact, yours truly did a podcast with them that was just released, I believe was it Friday this thing came out? And honestly, I'm not a big fan of listening to myself talk, even though I talk nonstop. But out of all the interviews I've done, I actually feel like there was a lot of good content put out in this one, and it's available now. You don't have to go to Traders for a Cause's website to view it anymore. It's now on their YouTube channel. But still, go to impact.tradersforacause.org and make a donation anyway, because we really want to raise more money for this cancer stuff. And I'll just give you a sneak peek, guys. I don't know if you guys can hear it.
Even though I had to find my system and my strategy and what it is that my core competency is, there was still a lot of what I did that was discretionary. And what I realized is with that much discretion, there's still a lot of stress we put on ourselves, whether you realize it or not. It's just part of the business, and we do it for so long that we don't even recognize it. We just think that it's normal.
So that is just a sneak peek, guys, of my Traders for a Cause interview. I really think you guys should go check it out, because I talk a lot about some of the things I've been personally going through recently and some of the things I had to do to make big changes in my trading. And so let's get right into the topic for the week. And remember how I was talking about Spike Heat, right? Well, all weekend long my head has been buried in Spike Heat and the data and the numbers. And that's why this week we're talking about edge. And your edge is everything, guys. And the thing about edge is that some edges are, they're what we call robust, meaning they work in almost any market. There's certain things that are fundamental laws about the stock market. One of the favorite things I always talk about is stocks always move the same way. They can't go higher unless they're making higher highs and higher lows, and they can't go lower unless the opposite is true. So that is one of the fundamental laws of stocks and how they and the market, and that will never change. And if you build an edge around that, then you probably have a very robust system. But there are things about the market that change all the time. The market is constantly changing. We go from one hot sector to the next. There's sector rotation, there's market cycles, there's a million things. And depending on what your edge is, it might only be good in a certain market or a certain time. Another thing that can change is everyone can start trading the same edge and your edge can completely disappear. So you need to understand that if you just rest on your laurels, your edge may pay now, but might not pay later. So you need to be proactive and you need to be constantly defining new edges. And it's a lot more simple. I think I should have said simpler. It's a lot simpler than many people probably think. Now, sometimes a ton of Excel work and data can be a little bit daunting, but I'm telling you the best way to learn is to just do. So if you don't use Spikey, you're gonna have to do things manually unless you learn how to code. Of course, you can always go learning how to code yourself and getting data through. A lot of people use Polygon now. Prior to that, a lot of people use other things such as C++, whatever it be, right? There's data out there and there's correlations in the data. There's patterns that repeat. There's things you can notice in the market that just seem to happen over and over again. But your job is to find the edge. And the only way to do that is to first identify one, something that you think is an edge. And the only way to prove it is through the backtesting of the data. So you got to go get the data. You have to either refute or validate your idea. And now listen, this is a big thing. You can't start out by attempting to validate it. You must start with a very open, broad view of things and be unbiased, because you can't just go look for data that's going to show you what you want to hear. You actually should start out from the opposite view and you should try to disprove it first. Now, if you do find an edge in the data, which is possible, and I will tell you, I have found a new one I'm working on this weekend and it's amazing and I'm very excited about it. And the cool thing is when I start finding an edge, I start with a pretty broad context. And if it's profitable and has a positive expectancy over a broader view of it, then the only thing left to do is refine it and get it more and more dialed in. Start asking questions like, okay, it's great like this, but what if we just change one thing? Or what if we only look at it under this scenario? Or let's only take it in times of extremity, right? A lot of times edges reside in the extremes. So it's your job to find those edges and exploit them until they work or no longer work, and you have to identify what market conditions they work best in. But I just want you guys to understand that you shouldn't be resting. You should be constantly looking for new edges, guys. So let's get into the disclaimer. Of course, neither I, True Trader, or any of its representatives are registered as security broker dealers. I'm not a licensed financial advisor. Anything you hear me talk about today is just for entertainment purposes. It's not a solicitation to buy or sell any stocks. Trading is risky, guys. Duh, right? We all know that. So let's get crooked. Of course, I can get rid of this now. There's bar chart. Let's start with the ES, guys. We're going to start with the broader market. Let's go ahead and start on the weekly. Of course, we do have a new monthly candle start. We'll go ahead and start here on the monthly. So remember, my job is to plan for all scenarios, if you remember that from last week, right? So there's a few different scenarios that can happen from here. We'll go ahead and just hammer those out real quick, okay? So the first thing that I'll be looking for that could possibly happen on this weekly chart is a lower high on the weekly, meaning like a major lower high. So this one here could be it. If we just roll over and come lower, you might have it. And in fact, I think it helps for me to just draw these out. What are these little things? I don't know what these are on my chart. Gotta get rid of those real quick. Sorry, guys. Let me draw these out for you. Okay, so what I say about, you know, a lower high is there's different ways to put one in, okay? So this could be a lower high right here. We have definitely broke the previous week's highs, and we've pushed up. We're right into resistance. You can see it really stuffed the underside of the weekly 20. So from here, we could do a few things. We could pull back and try to push up here, and this is actually a long trigger, right? Because we put in a higher low, and then we break this high, and we're attempting to head back to highs. Now, if we were to do that, and then this stuffs and makes a major lower high up here, and we roll over, that's very, very negative for me. In my view, that's as bearish as that can really get, because that's a failed long trigger resulting in a major short bias. Now, the other thing that could happen is we could just roll over from here and just come lower, right? And break, I don't know why that just broke off like that, but we could just break last week's lows. That could happen as well. And the other thing we could do is, well, two other things we can do. We can continue just straight up and try to test highs, or we can just base for a while and kind of get this sideways action where the range kind of contracts. Either way, just like we said last week, right? My job is to prepare for all those scenarios. So, certain scenarios that we just described lend themselves better to the long ideas. Other scenarios lend themselves better to the short ideas. It's your job to identify which scenarios are the bearish ones and which ones are the bullish ones, and know how to apply them. But judging just from the daily chart, I want to point out a few things. We bounced off the 200-day on Friday very, very accurately, which is pretty convincing, right? And it shouldn't really be a surprise. Bulls made a stand at the 200-day, no way, right? But what I would like to point out is how we talked about this last week, which was even though we broke this support level here, we never closed below it, right? And after that, we've held it 3-4 more times, right? Even though we didn't really test it to the penny or anything, we were coming down here and testing these lows and holding. And then we reclaimed the 200. Now, we're kind of pinched. You know, we ran into the underside of the 20-day and we pulled back to the 200. We held the 200. You know, this is how we kind of have to play things from a support and resistance type of view heading into the coming week, right? We don't have a crystal ball, but we can easily start identifying the major levels of support and resistance, okay? So for support, guys, the 200-day is my first level that I've written down. It's going to be, you know, another one of those levels where it just seems like a no-brainer. And considering it held so well on Friday, you know, the bulls really are going to want to defend it. It's also, if you look, it was also the long trigger. So we pulled back, we made the low. Pushed up, we made this lower high, but this is intermediate high, okay? Draw that right there. Pull back, make a higher low, and then we broke that. And it took us right back to the target, right? The 20-day. But now we're retesting it. So it's a very important level, and I'm watching for this to hold next week. If they don't, below that, we got the 4,400 to 4,410. You got the quarterly and the annual, all right there in that same level. Remember, I look at these as a lot more like ranges than just like written in stone to the penny levels. But below that, we have 4,300, which is the round psychological level. And then below that, 4,260, which puts us right back into these lows where we kept protecting it when we came down. Now, remember, there's obviously the low from that big day where we washed down there at like 42, just call it 4210. But like I said, we never closed below these 4260 levels. So I want to watch that 4260 level. If that were to breach and we get a close below that, then I'd start thinking we might have some more downside for sure. On the upside as resistance, I'm looking for the 20-day. And remember, this really depends on where we're going to open. No idea if we're going to gap up, gap down, open flat. Rarely do we open flat on a Monday. But depending on where we open, that may change these initial levels, right? So The 20 days, the first spot. The next spot I have, the 20 days also right there at that 4,500 level, which is a psychological round number. The next level I got written down is 45.90 to 46.10, which puts you into the 50-day and that quarterly pivot up there. And then the next spot is 46.70, which is, that's what I wrote down. 46.70, which is going to put us right up, kind of testing the underside of this trend line that we broke. And up into these levels that we had identified this quite a while ago as significant support and resistance depending on which side of the line we're on. So any push up there, I still would expect it to give it a bit of a challenge. Bears should be stepping in and trying to protect that level. The NQ, let's head on over there. Again, we kind of identified this last week and maybe I think even the week before that, but the tech sector has been quite a bit heavier and weaker than the S&P was. We still have not held back over the 200-day. We shoved straight up into the underside of the 20, which was also the 200-day and rejected pretty convincingly. Now, again, you do still see this long trigger that we had, which was the pullback, push up, intermediate high, higher low, and then we broke, and it went straight to the 20-day again. Straight to the target, nothing more expected after that. But now that we've hit the 20-day and we're rejecting any pullbacks that are major, I am still kind of looking for them to put in a higher low for the ability to eventually trigger over last week's highs. Just put it right there on. There we go. So if we keep coming lower, eventually we may end up triggering back over that, and that's a higher time frame long trigger, which may attempt to push us back to all-time highs. But again, all the scenarios that I kind of laid out there for the ES, they hold true for this as well, right? We can try for highs, either reject and get a major lower high and then come lower. We could pull back, make a higher low, and start to base and maybe get a base built for an attempt to go higher again. Or we could just roll over and lose lows. But we have plans for every one of those scenarios. The NQ I've got written down for support. The first level is 14,400. Yep, pretty much the low from Friday, which again was an important level, right? You see it held back here in October. Even though we came back under, we've reclaimed and then we pulled back and held it. So basically Friday's lows. That's what I'm looking for, is the first level of support. Next level under that is the round psychological level, 14K. Puts us right down here around those lows from 2 weeks ago. And below that is 13,737. Now I know you're like, why would that be such a accurate number or fine-tuned number? It's because it's the weekly, or is it the weekly? No, it's the monthly 20, guys. It also puts us right down into the lows before the big bounce, but that monthly 20 is going to be pretty key for us. As far as resistance goes, I've got 14,850 to 15K, the psychological 15,000 level. It puts us into the underside of the 20-day, the underside of the 200-day, the quarterly, the monthly, and the annual. There's just so many things in there. Like, that's going to be a tough spot. If we get on the other side of it, no different than thinking that's a tough spot and should be a lot of resistance. If they get through that, I'd be watching for that to hold too, okay? Now, above that, I'm going to have 15,200 up to, what did I write, 15,350. And that's going to be last week's highs and a little bit higher, like into these levels here, okay? And then above that, we have 15,650 to 15,800. And that's the 50-day and the quarterly. So those are the levels that I'll be watching for the coming week. Again, it's going to depend on if we gap up or gap down tomorrow. Bitcoin. Now, I didn't write anything down too much on this because things can change so quickly on this. And I was looking at it yesterday and I was like, dude, who knows where it's going to be tomorrow when I do the Sunday prep. But it is kind of still right in the same spot. And I do have 39K as the first level of support. So that's a pullback to the monthly, and it's also kind of where we had this little long trigger from here. You can see all these recent highs that we just cleared, right? That's the first level of support. Below that, we have 36K, which is your quarterly pivot and around those lows. Those are your two levels of main support I'll be watching. Again, I don't trade crypto, guys, but I trade a lot of the equities. For resistance, 43K puts us right up into these recent highs in that 50-day. 44, let's call it 44.4 is going to be these highs up in here. Actually, which 44.4? It's, man, such a every little tiny move with the cursor moves it so much. I guess I could zoom in, right? And then above that, I have 47.5, which is your annual pivot. So those are the main levels I'm watching for on Bitcoin, just so I know how I can trade the cryptos. Let's get into the sector analysis. As always, guys, barchart.com, stock market sectors, and we can go to our stock short-term matrix, and you'll see had a few sectors that had really strong weeks, right? And I'm sure I've said this a million times, but I'm going to keep saying it. You cannot just look at how a sector performed last week and think if it had a big week that it's an automatic long for things in that sector, or if it had a bad week that it's an automatic short. You must look at where the sectors are chart-wise. So let's head over to our ETFs, and I've got plenty of notes about plenty of things, guys. I'm just going to try to read them right off I just want to get through these so we can get to the ideas, because I don't like these things to go so long, right? The first thing was XLY. What I wrote down was it had a good week, but it's right up into some serious levels of resistance. You can see there's still a lot of overhang up there and a lot of supply. So I think any kind of push higher up into some of these levels, and there might be some good short opportunities in the sector. That's the consumer discretionary, guys. And remember, that is one of the ones that had a big week, right? Almost up 4% on the week. Energy. This is another one where been really strong, and I think everybody is already knows about the energy and oil sector and the way it's been performing. But Friday's daily candle looks a bit blow-offy to me. Obviously, I'm making up words here, but that is a pretty ugly daily candle. So what I'm looking for come tomorrow is, does the energy sector kind of gap down a bit, and possibly I'm looking for shorts back into some key levels of resistance from Friday, or do we open either flat or maybe up a little bit and then stuff right around Friday's highs, or maybe we go higher? The higher the better, always, when we get those big moves up. But when we have a blow off like that, I am kind of interested to see if that put in a near-term high. So keep that in mind if you're looking at the energy and oil names, that maybe the sector needs to kind of cool off a bit. You know, if this thing pulls back to some levels, and I actually do have some ideas in the prep for longs in the sector, the sector needs to pull back and cool off. But if it pulls back to support, remember, this thing's been bullish. I mean, out of all the ETFs, out of all the sectors, oil and energy have just been on fire, and excuse the pun, right? Financials, XLF, this one still looks really good to me, guys. Again, we held that channel. We never had a close outside of that channel. We're back up into right around the middle of the channel now, and I'm still thinking any kind of pullbacks to support may offer some really good longs in that sector. Retail still looks really weak. What can I say? Pops back up into the 20-day, still rejecting. As long as that holds true, all the names in that sector still may offer really good short opportunities. You got to go on an individual chart by chart basis if you're looking at things like Macy's or Kohl's. Remember, Kohl's had a buyout, and they came out last week and said that they didn't think that the buyout reflected the true value of their future cash situation. And I laughed so hard. I was like, dude, I felt like they were getting a really sweet offer there. What do I know, right? I'm stupid, just follow price. The next sector I wrote down was XLV, and this one, let me pull it up. Again, we're right up into some serious levels of resistance. We'll have to kind of wait and see what it does this coming week, right? If it stuffs here, there may be some downside in some of those individual names. If it can reclaim some levels and start putting in some higher lows, maybe we get back above and start looking bullish. But we're right into so many different levels. The underside of that trend line, the underside of the 20-day, just there's a lot of stuff up there for this thing to get through. Next one was communications, and God, they've been so ugly. Remember, communications, we just joke about them every week. We're like, dude, they look like they started a bear market without the rest of the market knowing. They're just like, see you guys, we're out. Look at what they did. They had a big push up in the underside of the 50-day, and then they got just destroyed. Okay, so I still think this looks really heavy, really weak, really bearish. Watching for all pops back into resistance as possible short opportunities in the sector. Biotech, again, now this, remember, we've been talking about this one being like extremely oversold. There may be some great opportunities. We are starting to see what kind of looks like the beginning of a possible bounce. We put in a low, we've pushed up into the daily 20, and we've pulled back. I'm really kind of watching what happens this week, guys. Do we make a higher low, or do we lose last week's lows and come lower? Either way, I'm going to be getting ready for this thing to tell me what it wants to do. If it comes lower, hands off, no harm, no foul, right? If we start to, like, I'll just go ahead and set this alert right here. Just call it over 96, okay? Over 96, and we could get going. I'd rather see this week show us one more try, like bring the bears in, let's try to go lower, and then let's defend, right? Like if this tries to go lower and can't, and then we go break that 96 level, we might be ready in the biotech sector. But remember, this is how we create these if-then statements. If we lose those lows, hands off. No reason to be involved. Wait for the trend to confirm. And XLK, tech sector, again, rejected. It's just like the NQ guys, rejected some serious levels there. We're back under this trend line. I will be watching to see if we put in a lower high and then roll back over. And last was oil. And the only thing I wanted to point out about oil was it did not get as extended as energy did. And, you know, even though it may have that blow off looking candle to it on Friday, it didn't get all ahead of itself last week like energy kind of did. I mean, it's hard to say energy got ahead of itself, just slightly, right? But I'm looking this week to see what the correlation looks like between oil and energy. That's just the note I wanted to put out there. And that's it. Let's get into the actual ideas. I'm going to go back to my main watch and we'll just type them out. The first idea, these are all long ideas, guys. Strong stocks looking for continuation. And I'm going to try to just fly through these because here's something I've been thinking about, guys. The ideas themselves, I don't like people copying them because I feel like you're not getting the whole picture. I can tell you my levels, I can tell you what I'm watching, but it's up to you to manage your risk and actually create a game plan. I think all the sector analysis, all the broader market stuff, and even the psychological stuff that we talk about at the intro, that's the real meat and potatoes of these Sunday preps, guys. So if you guys disagree, leave comments, let me know. But I really feel like the ideas are the least important part of this whole thing. And, you know, I'm going to try to spend a little less time getting all involved in them. First idea is AA, guys. I'm looking for a flush to 60 to scoop it. That's the 20-day. Thinking there was some things I saw on these higher time frames. Let me check real quick. No, it wasn't these time frames, but 60 is definitely going to have my attention, guys. 60 is the spot for me on AA. It's just been a very strong stock. You know, you can tell it just big pullback, push up, higher low, triggered, and we're going. So I'm looking for pullbacks to the 20 to start holding. ABBV. That is the next idea on this list. And again, so this one I actually have two levels I'm looking. No, I don't. Well, only one I'm going to give you, and that's this 138. It's the breakout area. We've had this thing's just been a strong stock. It's just higher highs, higher lows. I'm looking for this to roll over and hold this 138 level. It's very, very black and white level. I want to see a flush down to it. If it's an emotional flush, I'll probably get involved. If it just kind of pulls back slowly, I'll wait for a trend to develop. I'll wait to see higher lows and something to get my interest. So I have to find risk at that point. But I do like this chart. Think about the market, guys. Here's the thing. I could find hundreds and hundreds of charts where they look oversold and ready for a bounce or whatever. But like the market had, if you remember what we talked about last week, we talked about the market's oversold and we should get a rally. We should get a big rally, and we got it. If your stocks that you're looking at for strong stocks that should continue aren't somewhere near highs, then that's probably telling you everything you need to know about that stock. So that's why the charts I'm showing you, like AA, at the highs, right? We're at highs. So the market rallied and these things were going. ABBV, we're at highs. Market rally, this thing's going. That's what I want. That's what I want to see on the names that, to me, scream strength. Okay. Next is COP. Here's your oil name, oil and energy, and it's a very, very high confluence area, guys. That annual pivot right around 87 is going to be right by the 20-day, and you have a bunch of lows. You had 2 days where the lows were right there, and then this area where it kind of paused after a big move up before the pullback to the 20-day. So this would be the first real test of the 20-day since way back in late January, and I definitely want to get involved, especially if oil and energy take that breather we talked about, right? The next idea is Ctsh. This one was on the prep. It was either last week or the week before. Ran up into earnings, had earnings. Now we're kind of just, putting in these higher lows. 85 is what I'm looking for, guys. And it's going to be like Friday's lows coupled with a few other things that I had seen, just looking here in these intraday areas. You're going to have the 50-day right there. I just really think that's a good spot to get involved on the long side for Ctsh. This is a beautiful chart, by the way, and this was what got this chart looked so good for these levels down here on this pullback. That's what got it put on the Sunday prep a few preps ago, if it was last week or the week before. The next idea was EA. Now listen, guys, have you guys not noticed something going on about a theme here? Video game creators, EA, Activision, Take-Two, have all been just catching bids, getting runs. You had Microsoft, they're buying Activision. You had Sony bought, I forget the name of it, but when they halted Sony for the news that there's some acquiring somebody, Take-Two and EA and everybody else ran up, had these big spikes because people were like, oh crap, maybe Sony's gonna buy them, right? Like the metaverse and the gaming world is hot right now, and so I want to make sure I have my eyes on these gamers. So EA, guys, that's what I wrote down was the sector theme's been really hot, and I'm looking for 134 as a dip buy. It's the 20-day, the quarterly, and the annual, all right in that little area. The quarterly is a little lower. The quarterly is down at 133, but you have a monthly and an annual right there. And I believe the yellow line on my chart is the weekly 20. You can tell real quick if I just look at a weekly. Yeah, the weekly 20 as well. So 134 dip buy on EA because that sector's been hot and this chart looks great. The weekly looks even better too, right? Over this level up here is a big old long trigger that should take us to highs, and I want to set an alert up there so I don't miss that. But over 142.55 should give Electronic Arts a bit of a surge, and the target on a setup like that would be all-time highs. Or is it all-time? Nope. It's going to be, yeah, it is. All-time highs up there. Okay. Moving on, J&J. This is vaccination stuff, pharmaceutical plays. What did I write down? 168 is the 50-day, the annual, and the 200. I don't know if this one comes early in the week, later in the week, or at all. But if this ever comes back, this had a big move, right? We just went from 158 up to 173. A pullback right into the 200-day, the 50-day, the annual, the previous month's monthly, this month. So much confluence right there. I'm sure it's probably lining up with a fib too, but that level definitely has me interested on J&J, and that's not necessarily going to be a Monday morning trade. Remember, guys, a lot of my ideas are kind of like looking for that early flush Monday morning. Sometimes it's like this, and I'm actually thinking might be midweek, might be late week. This might be next week, but I've got an alert set down there, so I'm not going to miss it. Let me get a drink real quick. All right, a few more on this list, guys. PG is the next one, and it's funny because PG is part of that consumer staple sector, which has been on fire, and you can see we're getting this flag up here, right? Big old bull flag up at the all-time highs. I gotta make sure it's all-time highs. Sometimes I don't scroll back far enough, and then I get DMs like, that was just 52-week highs, right? So all-time highs. I'm looking for, and listen, Friday we closed at lows, right? So when we close at lows like that, thanks to Goose, we should all be on point with these. Sometimes it's best to think this is coming a bit lower first. So same when things close at the high of the day, you're probably going to get a bit of a continuation the next day. So I am looking for this to flush out a little bit more on J&J, or not J&J, Procter & Gamble. I'm looking for 160.50 monthly in the 20-day, guys. And I do have 2 levels on this one. If that does not work, I will revisit this at the 50-day. You have all the lows from the bottom of this flag that's forming up here, right in that same area. So the 50-day is another good spot if the 160.50 area does not work. And the last one on this list, guys, Visa. Visa and MasterCard have been on a tear ever since Chamath basically said that he was short bias on those names. Big old rip. You can see we went from 195, 196 up to 235. Earnings were stellar on them. I'm looking for a major pullback to get involved. 200-day Friday's low a day would be a good spot. And if that does not work, so I'm looking 225. Psychological, those quarters always seem to friggin' hold. If that level does not work, the 20-day and the monthly down there would be my next spot. So 2 levels on Visa as well. So that's it for the strong stocks looking for continuation. Moving right along to stocks that are in the oversold reversion setup. So these are stocks that I just feel they've sold off a lot and should get a bounce soon. And I think it goes as no surprise. The first one on my list, guys, is Facebook. I just feel like, we had some gaps down here. We filled the first gap. There's 2 more gaps I've got identified. One down here sub 200 and the other one is down in the 170s. And I think that's all of them. Yeah. So we had 3 gaps and they've been there for a very, very long time. We filled one and we're way off. We're way off from the 20-day. And the thing about something like Facebook, guys, is it's hard to think that the big money doesn't circle around back to this one. I mean, no matter what, hate them or love them. Like, dude, Facebook, I don't even use them anymore. The only thing they're good for me personally is they remind me of people's birthdays. But I just can't ignore the fact that it's so far off that 20-day, and I know that it's a one. You got a ton of funds in there that might have got smoked on this, might be getting hurt on the name, and they either already capitulated or they're probably going to be adding to their positions down in these areas. I am looking at 2 different things. Friday's low a day to play against. I basically put that around 233 is the monthly. I would not mind starting there and be ready to kind of add into Friday's low a day. We get under last week's lows, and I'll probably just hop on out and take. Guys, understand this. I take losses all the time. It's okay. It's just part of what we do. I'm not going to let this break Friday's lows and not get out. So make sure you guys have plans about risk management. The other way to play it is watch for the higher lows, watch for something to come in. Let's see. Let me go to an intraday chart. Let's see if we can. Yeah. So what I'd like to see is one more pullback, even if you don't want to take this, meaning buying the weakness. There's a trade-off, right? You buy the weakness and you're anticipating we're going to hold lows and go higher. You're going to have a lower win rate because you're anticipating. So the opposite of anticipating is waiting for validation or confirmation. There's a trade-off. The risk reward is the trade-off. If we pull back and hold a higher low and then come back over Friday's highs, that's your long trigger. And that, the problem with it though, I remember I looked at this. It's going to be getting pretty close to the 120-minute 20, which that's going to be your first target if we take out Friday's highs, because that's the first time frame we're extended on. Everything else we're already kind of caught up to the 20. So I'd rather, on this particular play, I'd rather be the guy that's anticipating and buying those Friday lows and then seeing if it starts to work, if it starts to confirm. I can always add to the position if it starts working. And then, if this thing does break Friday's highs and we go straight to target, this is the type of play where you could probably scale out and leave a runner because it's Facebook. And if they really do start buying this thing up, you don't want to be that guy that took like 2 to 3 points on this name. All right. The next idea on this list is PayPal, and these guys have just been getting destroyed too. Again, like I think the chart's completely broke. I have no, I actually took a loss on a swing long in my IRA on this, and it was when it broke this shelf here. And this is what I talk about all the time about this whole, I'm not in the business of hoping and praying something comes back, because if I hoped and prayed, that's another 50 points lower. I'm not trying to do that, guys. But now that we're down here, you can look to restart a swing position. You can look to just take a piece of the move as a day trade and maybe leave a runner on. But there does come a point when people circle back around to these things. And if you look, zooming out, look at where this thing has sold off to. These lows right now line up really nice. Whoops. Sorry about that, guys. They line up really nice with this shelf that had been built from way back in 2019 all the way to mid 2020 before it broke out and had its meteor rise. So this is the spot for me, guys. I think Friday's lows give a good little spot to try to get in, and if not, look for dips on a break over 127 is what I've written down. Over 127, I feel like maybe we're going to be confirming we're going higher, and then I just want to join trend by buying dips. All right, that's it for the long setups. We're going to jump into the short setups. The first setups are the weak stocks, looking for continuation. And these guys, again, I could have put 500 different names on this list. All right, so you're going to get the ones I am personally going to be watching. AMC, any pop into 18 / the 20-day, to me, is a very, very great spot to think you're going to get a nice reversion back down. You still have a ton of people drinking the Kool-Aid, thinking this thing's gonna, I can't even wrap my head around some of the things these people say. I'm not even gonna, I'm not even gonna get into it right now. We're just gonna move on. 20-day, 18. That's the spot for me on AMC, guys. And if they get through it, dude, 20 would be a gift. Okay. Next idea on here is Tesla, and Tesla's kind of a neat idea because it lends itself really well to a few other ideas. And what do I mean by that? Let me show you. I'm looking for a pop into the underside of the 20-day, the weekly 20, and the monthly pivot, all right up in that 970 to 980 area. Now, I know a lot of people may not like to play Tesla because it's so pricey. Remember, out of all the expensive names, Tesla has one of the most liquid options chains, so you can play with options. If it does spike up there and you don't like that price range, well, guess what? It's probably going to lend itself pretty well to the same idea on Lucid. If Tesla gets that spike, Lucid may have a push up into that 30.20 to 30, what I write down, 30.6, which is pretty much this little resistance area. It's going to be the highs from February 1st. So if Tesla gets that pop, you may have Lucid right up into this spot. And if it's not, Lucid may, if we're lucky, Lucid may be even higher, maybe up into these 34s. And the other idea is XPEV is another one that will follow the EV sector. So you get that pop on Tesla and you don't want to play a $900 stock, well, you're going to possibly have XPEV right up into 40, which is the underside of the 200, previous month's monthly pivot, and the 20-day. So, that's what I like about the Tesla idea is it kind of lends itself to two other really great ideas. I personally will play Tesla. I'm not scared of the more expensive stocks. They have range. They still make these moves. And you can still make a pretty penny off the equities. And you can trade the options as well if you guys are options traders. The next idea is eBay. eBay, I wrote down, 60.6. So basically you see all these highs from around here. They've been rejecting. Friday rejected. Friday's highs play against them. If it doesn't happen on Monday, say we just come lower and maybe later in the week we get a spike up there, you're probably also going to have the 20-day coming right down into those levels as well. Next idea is FSLY. This one, I like the look of this into 29.60. The 20-day obviously is a little bit lower. I'm hoping we poke through it right up into, was it Monday or Tuesday's highs? February 1st. I think that was Tuesday. So Tuesday's highs, monthly pivot. And it's also, if you look back to whatever this week was, January 20th, that week, that was where you had the push up, made a lower high, and then broke, and that was where you got the big wash, right? So that spot right there looks like money to me. Make sure I set my alert. Sometimes TradingView is really weird about their alerts. All right, got my alert set so I don't miss this one. I do think that's going to be a good trade. Next is NVAX. This is the last name on this list, guys. NVAX looking at 97.80 to 98. It doesn't look very far away on this chart, but that's 10 points, and the stock's ATR is 1160. So I think a big spike into, you can even play it against Tuesday's highs as well. But you got the quarterly, the 20-day, and that monthly right up there. I think a big spike. And this is the kind where I like it to be emotional. I want NVAX to literally rip that whole ATR emotionally. If we get, right off the open Monday morning, 6, 7, 8 point spike and can just somehow reach up into those upper echelons, I want to be there because everybody chasing that's got FOMO. It doesn't mean it's not going higher, but it most likely is going to need to take a breather first because things can't just go straight up. So when the people on the other side of my trade are those irrational FOMO chaser traders, that's exactly who I want on the other side of my trade. So I will 100% be praying for an emotional spike off the open tomorrow morning on NVAX. All right, the last section, guys, is overbought reversion, and the only name is XOM. And keep in mind, it's not really the typical name that ends up on this list, but it's going to follow oil and energy. And remember what we said about energy is it had that blow off look to it. Both oil and energy look like they need to take a breather, and so does ExxonMobil. I really want to play ExxonMobil right up into Friday's highs. It's going to depend on what we get. Maybe we get a gap down, and remember what I said about the energy sector if we get a gap down. Gap down, I'm looking for spikes back into resistance as the fade. So let's take a look at, we'll just look at the 5-minute here on ExxonMobil. Say we gap down, we open around 80. Any pop up into 81.57 or 81.90. 81.90 looks really good. That's not playing against Friday's highs, but you can see the levels that it tried to push up. And in fact, that was a major little short trigger right there, right? You get this lower high followed by the lower low right after this, and it just rolled over. And in fact, I'll just draw this little line right here so you guys can see it. Right there. That's your short trigger, heads lower. Obviously, nobody probably took that because it's going right into the weekend. Nobody's trying to swing this thing. But any spike back up into those levels, if we gap down, that's going to be a spot for me to really be watching to see if we get lower highs, any sort of momentum fading, and look to get short on ExxonMobil. So that is it for the prep, guys. Let me go through the chat real quick, see if we had some questions I can answer. And if not, we're going to sum this one up and be out of here. What do I make of Simon's asking about the IWM chart? I actually have it right here in the watch list. We've talked about this one plenty of times. When I talk about IWM, I usually just use the Russell. And this is what you can see this box I've had drawn, right? So went sideways forever, broke below it, and now we pop to the underside of the 20-day and stuff. I mean, even if we get above the 20-day, I feel like pushes back up into the underside of that channel, that big long base that it built, is going to be really tough to get through. So bearish is all heck on this stuff right here. So I actually I never want to be that guy that's getting people scared or fearful of the market. Because in reality, you don't need to be. You just need to know what to look for and then prepare accordingly, right? But I personally am thinking we're going to have a major lower high in the broader markets and may come lower. And, that's fine for me as long as I'm prepared for it, which I am. What's not okay is if you're just so focused, like tunnel vision on the bull thesis or the bull market continuing, and then you completely ignore all the signs. And, everything looks so clear in hindsight. But if you take the blinders off, there's so many things out there that are telling me to be prepared for this. So, again, I'm not trying to instill fear in anybody. I'm just trying to make sure everybody can stay objective and rational. Your MAs on your daily, weekly, monthly charts are EMAs or SMAs? They are SMAs. I use SMAs on everything. I use the 20. I use the 50 and the 200 are on my higher time frames, and I use the 20 SMA on every time frame. And I'm not you'll never hear me tell you EMAs are wrong. I don't believe that. I think any indicator is just as good as the person that uses it. You guys have to figure out what works for you and figure out how it fits into your system. Momentum from Friday will continue into the 20-day. I don't see any reason for major selling relative to Friday. All right, I'm going to try to just identify just the questions in here. Kevin O'Leary was recommending Facebook and adding to his position in earnings. Yeah. Dude, don't ever believe the talking heads on any of this crap, guys. Ricky doesn't believe AMC can make money and exceed these measly valuation levels. Yeah. Okay, Sonny's asking about Roblox. We can do that. You know, Roblox is one that I trade very often. Why do I trade Roblox? Because it's got liquidity and range. It's a trader's ticker. I care nothing about swing trading this, but this thing gives massive opportunities all the time. Right now, this one could have ended up on that weak stocks looking for continuation thing. I'm, a spike from here, from 63.74 where we closed on Friday, depending if it gaps up or down. If it were to open where we closed or lower, check out the ATR. It's $6.75. An emotional spike from like 64 straight up to 68, 4-point spike. I'll probably fade that if it's emotional. If it wants to break over this 70 level, bring the 20-day to me. I don't really want to be getting long this name unless it rolls over and tests 54. Again, these names, when the chart looks like this, I'm looking to short spikes. Until you guys can objectively see this, right? I'm not the only person that sees this, right? This is just lower high, lower low, lower high, lower low. Underside of the 20-day stuff. 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 As long as it does that, why should my bias change, right? So I will keep doing the same thing until it stops working. And it's easy to see, right? If we get above the 20-day and then we start making pullbacks that make higher lows, then we change the thesis. Okay, it's very, very simple. Do you draw any inference about the rest of the market based on thoughts on IWM? None. No. IWM is just it's just the small caps, right? So trust me, think about the same way it went sideways for however long that was, a year and a half, 2 years or whatever, and meanwhile everything else was in a bull market, right? That should tell you they have nothing to do with the rest of the market. Now, if the rest of the market starts rolling over, I guarantee you that would actually have more of an effect on the Russell than vice versa. T-Burn, hope you did not mention it and I missed it, but thinking TSM off the 200-day and the quarterly for a bounce. TSM is one that I don't trade as often. I traded it when we were up here. In fact, I wish I could get a redo on that. I see it. And this one's kind of in no man's land. We're nowhere near the highs. We've made the big bounce from the lows, and now we're kind of just up in this like chop area. So, I prefer things to be like a little more towards one end or the other so I can get a bit more of a bias, like a directional bias. But it doesn't mean that, if this thing flushes down here, it may bounce. What I would say is, I don't know if that's going to be, that the lows from Thursday were like 119.30-ish, and that's like less than a point lower. And so if you lose Thursday's lows, this may want to come down to like 114 and test last week's lows. Was this last week? No, it wasn't. This was actually 2 weeks ago's lows. Last week's lows are going to be here. And so I can see, that actually does make it a bit confusing, right? Because last week's lows are going to be right around that weekly 20. But when you start to zoom in and start to see that that level didn't really mean so much in terms of like a major pivot in the price. And when I say pivot in the price, I don't mean like the pivot point on the chart that you see, right? When I say pivot in the price, I mean like here's a major pivot. Whoops, that's a little big. There's a pivot. If we can drag this. There's a major pivot. This one may be, you know, if this keeps coming lower, that'll end up being a major pivot. So like those aren't necessarily pivot points, but they are definitely areas or prices where the price pivoted. And so this, you know, the 200-day and that quarterly don't necessarily play a big factor in like where price has made a major turn recently. We'll see. I'm not here to tell anybody their ideas are good or bad. As long as you have a plan, that's really all that matters. And in fact, that's why I want to start putting so much less emphasis on my ideas and more emphasis on the market analysis and on the psychological stuff, because ideas are a dime a dozen. It's all about execution, guys. AFRM earnings this week. PayPal got crushed last week. AFRM, you know, yes, it's very vulnerable to earnings, but remember that they got a big push on Visa's earnings because Visa is doing something with them, right? So keep that in mind about ASRM or AFRM. So that's pretty much it, guys. I think that was most of the questions in the chat. Again, if you're watching this after the fact, please leave comments in the video comment section and let us know what you want to see more of, what you want to see less of. Trade your plan your trade, guys. Stay safe out there. I will see you tomorrow morning in the market.